Fellow traders, 'tis I, TheRumpledOne, coming to you on Wednesday, May the 21st. The year's 2025. Let's talk trading. What I learned losing $1 million. Key points. As always, these videos are for educational purposes only. Your results may differ from mine. And as I usually do, I'm going to remind you to always have your risk management employed. Never lose more than you're willing to lose on any one single trade or during any one single session. So, I read the book, What I Learned Losing $1 Million. It's by Jim Paul and Brendan Monahan. And it's a pretty quick read. And I've already done a video about one of the chapters. I think I did that last week, or maybe it was the week before. But I thought I should go ahead and share with you the key points of the book, or the key ideas. And the very first one, avoiding loss is critical. And it says it's more important to avoid large avoidable losses than to chase gains. And so basically, you have to have your risk management. It's more important than forecasting or finding winners. Now, I guess if you're listening to somebody that's lost $1 million, you might think, what do they know? Well, obviously, they've probably learned from their mistakes. And the next key idea is losses come from personal flaws. Ego, denial, or lack of discipline, not market conditions, cause most big losses. And I'm sure if you think about your trading history, you'll find that if you analyze your losses many times, the statement will apply to your loss. And so you have to be self-aware. So if you know you're lacking discipline, be aware of that. So now you know what to work on. Ego, denial, that's really getting personal. That's a hard look in the mirror. Really hard look in the mirror. Next thing is you separate your idea from outcomes. And so you don't let success or failure in the market define your self-worth. In other words, if you have a loss, it doesn't make you a loser. You know, if you have a win, it doesn't make you a winner. These are things that are external to you. And so once again, you know, this thought or this posture helps you maintain objectivity and cut losses when needed. Have a predefined exit strategy. You know, how many times have I and Walmart talked about having a plan? So know in advance when and why you will get out of a position, win or lose. You kind of pick spots on the chart, you look left. And so the reason you want to know in advance, in other words, have a plan, so you don't have any indecision or emotional reactions. It's just like, well, if this happens, then I do this, else I do something different. And once again, define risk in advance. Risk management. Know how much you're willing to lose on that trade before you get in the trade. And this prevents small losses from becoming catastrophic, you know? So define your risk in advance. And markets are not personal. The market isn't out to get you. Losses are part of the game. But let me tell you something. This is a hard one because I know it feels that way. I mean, that's why sometimes I call myself Mr. Inflection Point. Why is it every time or most of the times, it feels like I get in a trade and it just goes against me, and it might take me take an hour before I even get a chance just to get out, basically even. But what you have to do is you have to detach emotionally so you have better decisions, which kind of goes right back up to the losses come from personal flaws. And the thing is, success is about consistency. Long-term success comes from not losing big, not from making brilliant predictions. I'm going to read that one again. Long-term success comes from not losing big, comes from not losing big, not from making brilliant predictions. So I know just recently a trader asked me about their money management, and I was saying that if you have to ask about money management, you should not be trading. You need to just turn your trading platform off and study your money and risk management until you have it, till you understand it, till you have it down. So when you turn your trading platform back on, you you have decided in advance what your risk is, and it's got nothing to do with the method. And that's you have to separate the two. Because if you say you have a defined loss of $100, and you normally trade, say, a mini lot, or let's say you trade a lot, $10 a pip. So basically, you're saying if this trade goes against me 10 pips, I'm out. And so it doesn't matter if you're trading one of my methods, wick zone, rat zone, buy zone, fading the pivot, doesn't matter, because each one of those methods might you might look at the chart and go, well, if it breaks this support line or resistance line, or it gets down to this imbalance or whatever, I should probably get out. But if that's more than 10 pips away from your entry, you better adjust your position size, because you don't want to lose more than that $100. So once again, being consistent, it says think probabilistically first and play, or think probabilistically and play defense first. So they call it probabilistically, but basically, what's are the statistics on your side? Because there's no real probabilities in trading, but you have to play defense first and know your reasons for trading. And we talked about it. Are you investing, speculating, hedging, gambling, betting? And so you want to align your behavior with intent to avoid mismatched strategies. So investing, that's long term. Speculating, that's short term. Hedging, that's a whole different ball game. Gambling, then you're just having fun. So you really need to know this before you get in a trade. And so he said, so you can I got this book through my library, but I think I might actually go out and get a copy, just to have it. Maybe just for osmosis. I don't know. Actually, I probably won't get a copy. I don't know. I have any room on my shelves, but I would definitely suggest reading this book. So let's just take a quick look here at the market's doing. We still have some unfilled gaps on those Canadian pairs. Looks like, wow, even on the dollar yen. Yeah. So now we got the euro Canadian, Canadian yen, Canadian. Yeah, so it seems like it's a lot of the Canadian pairs. And we're 30 pips off the high, 169 off the low. We're 169, now 168 above the weekly open. You can see there's just no wick. And the daily, we broke out of yesterday's high. We broke out of the opening range for the week. And just so you know, we went through the launch pad because we have a high of 134.69. I'm kind of kicking myself because before I went to bed, I think price was around 134.32 or something. I said I should probably just, you know, put a buy in at 34.40 and a exit at 34.60. But I played it cautious. It's like I'd rather get some sleep than be thinking, you know, what's that trade doing, and looking at my phone or computer every few few minutes rather than getting some sleep. Little self care there. So let's take a look here. Bambino flex indicator said go long. Price near the pivot was long. We looks like we never hit the pivot today. So we've got a missed pivot down at 33.74 for the week. So for the year, we've got 2 in February, 1 in March, 2 in April, 1 in May. That's a lot of missed pivots for the year so far. As you can see here, price in and out of that upper wick zone. It dipped back down. Now it's going back up. I'm going to take a look here at I want to see if there's any open H4 pivots. Okay, we've got one down here at 133.60. So price is going to need to take that pivot out. And it looks like we're getting ready to hit the launch pad for a second time today. For the week so far, 204 pips of range. And we've had a high minus previous high of 109, so nice breakout to the north. Looking at the simple price action chart, once again breaking out of the previous H1 hour candle high. Look left, you can see here that was definitely, we tried it once, twice, 3 times. It's actually almost, 3 times the charm right there. But we're pulling back right now by a bit. Let's see, highest low trigger is happening as we're looking. You'd definitely swimming against the tide here. All that green. So you can see it's failed to close above here on M30 once again. So you look left right there. So nice M30 ranges, pick up a few pips every half hour. So, fellow traders, fastest 15 minutes in trading is just about over. So, if you don't want to buy the book, I can post this chart over on my Facebook page. And yes, Kreslik is down. I guess Hal's probably busy with other things too, and hasn't gotten the site back up yet. And I don't know when. So, as soon as I find out, then I'll start posting on Kreslik. So, as always, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.